Thank you very much, Christine. Thanks for the introduction, and I could see the relief on your face when I walked in. So sorry for keeping you, but I'm glad I made it just about on time. But as I was coming in this morning, I was coming in the tubes. Normally do quite convenient to stop at Westminster, so I got that extra stop today. And I was peering over the shoulders, as sometimes I do, of people sitting next to me. And I like to think it's because I've got an interest in what people are reading, what they're thinking about as a politician, but I think it's just, I'm just a little bit nosy. And on one side there was a gentleman reading about the Champions League matches coming up this weekend. On the other side there was someone reading about the Oscars, which I think is this weekend as well. And I thought it was quite apt really, because what I wanted to talk to you about today, well, one of the things I certainly wanted to cover was competition. And I think football is a good example where every team, every player tries their very best, certainly in the Champions League. And it means they put in everything they can, and as a result, the beneficiaries are the people watching, their customers, and ultimately benefit from that competition. And I think equally with the Oscars, it's very similar as well. All actors or the directors, everyone involved in making a movie, I think is one of the things amongst the others that will motivate them to try and get that trophy at the Oscars. And again, the result of all of the efforts as they compete against each other are the people watching, again, their customers. I'm not going to talk to you about today about the Champions League and Oscars and competition, in much more about competition in that sector, because I thought it was apt, because what I wanted to focus on was competition, of course, in the financial sector, and what you do, and the interest that all of you in this room have today in this new fast-growing sector, which incidentally I'm very proud of, and the government is very proud of, that it's grown, and it's growing here in the UK. The UK is leading the way. I want to talk about, first of all, just generally about competition in the financial sector, why we need more, what we as a government are doing about it, and then I want to turn to yourselves, your peer-to-peer finance providers, and talk more specifically about your industry. So first, if I can set the context, more than 5 years have passed since the financial crisis, and I think it's fair to say that nothing threatened the financial sector quite like that crisis. The public reaction to those events, rightly or wrongly, has been one of deep suspicion, and often, if we're completely honest, deep dislike of anyone associated with the financial sector. In fact, when I arrived as MP, my first day of work was back in May 2010, having spent 20 years in the banking industry before that. I had a unique sensation, I think a sensation that no one else in the new intake of MPs had, and that was that I was moving up into a more respected career. but judging by the conversations I've had with my own constituents and the correspondence I have regularly with the public, both as an MP and as a Treasury Minister, I don't think that anger is starting to subside, but it's still there amongst the general public. And those events, which were not the result of were clearly the result of irresponsible decision-making by some people, some much more than others. But I think, for it to be honest, it wasn't just mistakes by bankers working in the financial industry, it was also mistakes made by regulators and politicians. Those events were a demonstration that we needed to make some real changes to our financial services sector. Changes in the culture, changes in the way that they're structured, and changes in the regulatory system. So when this government took office 4 years ago, one of our key priorities was to reform all of these areas. And the changes we have made so far around ring fencing, around punishments for reckless behaviour, around greater deposit protection, have helped to create, I think, a safer and more stable banking sector. But on top of that, we've also had to create more competition in the banking sector, because I think it was clearly a lack of that that contributed to the problems that we saw. Because just as with football teams and with films, we know that greater competition will mean more benefits ultimately for consumers. It will mean more investment inventive products suited for niche markets. It will mean more competitive products or interest and charges would be more competitive. It will also mean more innovation, convenient forms of customer interaction. I think it's fair to say that there have been some long-standing competition issues in the retail banking markets, and that has especially been the case when it comes to SME banking and in current account markets. When the last government took office 17 years ago, there were at least 10 major UK banks, but over their 13 years in office, they all too regularly permitted and managed banking takeovers, which shrunk the number of market players and allowed a few big banks, 5 or 6, to dominate the market. Now we need to reverse that trend, and it's important that we have this goal in mind when we're implementing our program of reforms with the sole aim of making the sector much more competitive. So 20 months ago, the Chancellor asked the regulators to conduct a review of barriers to entry and expansion in the banking sector, which resulted in a major set of changes to capital requirements for new banks, making it easier for them to enter the market and to compete. In fact, today, the regulators are looking at over 22 applications from new banks, what you might call challenger banks, which is a record number, and I think a testament to how the changes that we've made with the regulators are creating a more healthy, competitive environment. We also introduced in the banking reform bill a requirement to create a new payment systems regulator, which will ensure that small banks and non-bank providers can get fair access to the payments system infrastructure, driving innovation and creating more choice for consumers. And the 7-day switching service will make it much easier for consumers to move their bank accounts, which will put an end to their banks assuming that their account holders will stay with them because it's just too complicated to move. On top of all that, we've made promoting effective competition in the interest of consumers as one of the key objectives of the Financial Conduct Authority. They also have a clear duty now to consider competition in pursuing their consumer protection and market integrity objectives. And indeed, very recently, we also added competition as a secondary objective for the Prudential Regulation Authority. As well as effective competition between the banks, though, we need to make sure that there is competition with the banks. So we're doing our bit by introducing a number of schemes to help improve access to finance and to support new forms of lending. The new business bank, for example, is drawing together all existing government initiatives under one roof. Last year alone, over 8,000 businesses benefited from the British Business Bank programs. And our ambitions are that the bank unlocks up to £10 billion of finance for smaller businesses over the next 5 years. As part of the bank's work, we're developing a new integrated service for high-growth firms, which offers simple access and experts for help. We've introduced £950 million business finance partnership, which aims to diversify the source of finance available to smaller and mid-sized firms. And we've also introduced the Enterprise Finance Guarantee, which enables lenders to provide finance to small businesses that have an insufficient track record or insufficient security. But as I often like to say at these events, while the government can set the framework and the structure to encourage competition, and while we can and we do, where possible, find funding to provide the competition ourselves, in some cases, ultimately it is up to individuals like you, companies like the ones that you represent, to step up and make that competition happen. And that's why I'm really pleased to be here today and to support this event. I don't think it's any exaggeration to say that the alternative finance industry is revolutionizing the way that both individuals and businesses access finance. And peer-to-peer lending is at the forefront of this. It actually seems a very simple concept, matching people or companies who have money and want to lend with people who companies who want money and have to borrow. But the simplest concepts are often the very best. And that's why we're overseeing a number of steps to support the growth of your industry. We've invested £70 billion already in peer-to-peer platforms through the Business Finance Partnership and the Business Bank. And there's also the new bespoke regulatory regime, which I'm sure we'll talk about today, for peer-to-peer lending to cover platforms' activities when they're arranging credit agreements. A regime that will very importantly be designed to protect the consumers, the ones that are lending, and also provide protection to borrowers via the platform. And support the growth sector overall by making these changes. And it's clear that without at least some basic level of regulation, the integrity of the industry could be called into question. And I think it is, in a way, in the odd position that any new entrant to the financial market faces. While the public have lost trust with much of the existing banking sector, they have perhaps in some ways even a bit more weary of new entrants into the financial sector. And we need to work hard as government, work with the industry to mitigate those fears. The FCA, as you all, I'm sure most of you know, have been consulting on the draft rules to apply to the sector. I've been told that they will issue a policy statement very shortly. And we too at the Treasury are looking at what more we can do to help your sector grow further. We've had a number of representations that have been made to us by a number of stakeholders, and we're looking at those very seriously. Because what I really want is to see the peer-to-peer industry working here in the UK and expanding here in the UK. Because this country, and especially this city, is uniquely placed to take advantage of innovation in finance. Not only are we a world centre of financial services, we also have a thriving and growing technology industry. So we can make this work with the government support, but more importantly, with the hard work and the creativity of the people in this room, in the UK really can be at the forefront of the alternative finance revolution. So I hope that you have a successful conference here today. I understand it's your first conference as an association. I look forward to coming to many more, not only celebrating your achievements to date, but learning from your problems to date too, and really paving the way so that the peer-to-peer lending can be another strong, stable and successful part of the UK financial system. Thank you for listening.
Thank you so much. It's very, very important to all of us, I think, to know we have got the support of government with people who really do want to see more innovation and competition in the financial services market. It's crucial. One thing you didn't mention, I wonder if I could kick off a few questions, because we've got 5 minutes or so for the Q&A. The tax regime around peer-to-peer lending, and I wondered if you might say a few words about that, because in terms of being able to compete on a level playing field with institutions like banks, I think we do face some challenges at the moment. The way in which the interest rate is deducted from gross lending rather than any netting off of bad debts, and the way in which fees and charges are accounted for. And also the uncertainty about withholding tax and how that regime may or may not apply to us. I mean, these are all wrinkles, and I guess you get these wrinkles with any new sector because the established tax regime has been there for donkey's years and hasn't had to face some of these new possibilities. But we'd be very interested to hear your thoughts on that.
Yeah. Well, firstly, you're quite right to identify when you have a new industry, by definition, the existing set of rules didn't have that in mind. And I think it's therefore absolutely the right thing to do for the government to look carefully at the existing rules, and you mentioned tax rules, and there are others around compliance procedures and so forth, for example. And first to make sure, do these rules really fit the industry, and if not, what can we do? Often with these things, it's not a question of just straightforward, just making the change, because we have to think sensibly as to what's the sort of knock-on impact, what precedents it sets, and so forth. But the issue that you mentioned, particular tax, we are very much aware and alerted to it for a while now. We have been looking at the issue. I wouldn't quite describe, I mean, it is often said, and you've used the words yourself, in terms of it's not a level playing field. I understand where that comes from, but in one sense it actually is. It doesn't mean to say there's not an issue there. In the current rules in terms of offsetting losses against profits apply to anyone that is any investor that's engaged in the business. Well, I think rather than investor, anyone that's trading those loans in the course of ordinary business. So if it's a bank, if it's a company that it is their business to buy and sell loans and invest loans, then they can benefit, and so the same rules apply to everyone. I think quite right what you're pointing out is more sort of someone coming into this from an investor perspective, and so rather than a trader. And clearly a case can be made, and I think sometimes sensible also to look at practice in some other countries around this sector. In the US in particular, as a country I've taken much interest in, and see how they've handled these issues. So we are looking at this, and it is something it is one of the things that when I refer to my speech we're considering that we can do, that we are deciding to see what we can do.
Thank you very much. I'm sure people in the audience may have questions for Treasury Minister. We've got time for a couple. If anyone wants to go? Yes, there's one over there. Bruce.
Bruce Davis from Abundance Generation.
There's a mic just there, Bruce.
Bruce Davis from Abundance Generation. I guess it's talking about the investor perspective. So there's two strands of conversation at the moment around investing. One is that consumers need simpler products in order to invest. That's what's stopping them invest. And then there's the other experience, which is that what people need is real things to invest in. And I was wondering where you were sort of feeling in terms of the overall emphasis should be. Should we be looking to simplify products for people so they can invest, or should we be looking actually to expand the access that they have to different assets and make investing interesting again? Any views on that?
Yeah, I think actually we should, as industries, as financial industry, sort of more generally speaking, and also not just specific to this industry, is should we really be doing a bit of both? I mean, it'd be a lesson from the financial crisis, and as we're still feeling the effects of that, for example, in retail products with personal protection insurance and other products where there's plenty of evidence that they were missold, and people didn't understand some of the products they were buying. In the business sector, for example, you could look at what's happened with interest rate swaps for certain businesses and some of the practices some of the banks had there. So it strengthens the case for both industries, making sure there's enough choice out there for consumers so that they can much more likely to get the product that's appropriate for them. But also, it is a case for some more basic, simple products. So as a government, what we've done is we asked Sajid, someone who had great experience in this area, to look into simple products, not just in the banking sector, but investment in life insurance and so forth. And she published an excellent report which came out a few months back, which many in the financial industry, especially the banks and insurance companies, are looking at to seeing what kind of products they can create. It's not always that straightforward because, understandably, financial service providers, for example, banks would say, look, if I create however you define it, a simple product that's easy to understand, maybe profit margins are a lot lower on that product as a result, and therefore I can't afford a scandal later on if people turn around and say, look, even though the product is simple, I still didn't understand it, or it still wasn't suitable. So we've got to get the right sort of balance in these things, but it is important to keep looking at them.
Edward Lucas here.
I'm Lucas, an economist. Could you say a few words on the cross-border aspect of this, in terms of both Brits investing in foreign P2P, foreigners investing in British funds, and what are you suggesting the European Commission in this? I know there's grappling with the question of how to regulate it. And a second small question as well, what's your feeling about the insurance aspect of this? Companies are now moving towards insuring the losses. Is this something the government welcomes, or do you think it takes away from the kind of granularity of the original model?
Yeah. Well, first of all, in terms of the international aspect, I mean, because this is such a a new industry, as we've sort of heard already in the introductory remarks, is that the UK is a bit of is the leader in this. I think the first thing is make sure that we have the right regulation sort of internally in the UK that's proportionate, that's done in the right way, as I've sort of set out, and no doubt you will discuss it further today. At the moment, some of the international features that are already having to be considered here, there are a number of European directives. The Consumer Credit Directive, for example, is one that touches on this industry because it sort of covers lending, as its name suggests, in general. And we need to make sure that we're setting up is compatible with that. And I think that if we get this right, get the regulation right, I think we can show leadership on this in Europe, because I think when I've gone to just the last ECOFIN meeting I went to, which is a meeting all the finance ministers in Brussels that happen regularly, on the agenda was a discussion of SME finance in Europe, and it was pointed out in that meeting that the UK is leading the way in alternative providers, and many people are looking to us to try and set the agenda, which of course is something I welcome. In terms of your second part of the question about insurance, are you referring to insurance of some of the lenders? You're talking sort of like
I mean the mitigating funds that pay make up the losses.
Provision funds. One or two of the peer-to-peer lending platforms have a fund that will act as a buffer if there are defaults, and actually help provide a bit of smoothing perhaps, or make good that default. They don't guarantee that they'll do that, but they are a sort of buffer, and that's what's explained to loans and lenders.
Right. Okay, so I can perfectly well understand. Before I came into politics, I was a credit derivatives trader. That doesn't sound too different from some of the practice in the wholesale market. So, yeah, I welcome innovation, and I welcome the fact that for this industry to grow, it started off, as we know, in a very straightforward way, and there's a number of new players coming into the market, and I think that as any growing industry, individuals, as they compete with each other, not just with banks and other lenders, but with each other in this industry, they'll come up with new ways to make their products more attractive than the other. So in terms of innovation and new product offerings, that's something for the industry. I think the most important thing from where I sit is making sure that at all times the information, the product, the transparency is clear, that it's only being sold to suitable investors. And I think if you already look at the draft rules that have come from the FCA, although still in draft form, where I expect them to end up is that I think there'll be a heavy emphasis on just making sure that your consumers and borrowers are really fully well informed about the risks that they're taking, and they have the appropriate risk warnings and so forth. I think that will be a part of it. And ultimately, in terms of how a particular aspect of a product is regulated, that is something I think a decision that the regulators need to make acting independently. It is not for someone like me to sort of get involved into the detail about what's the best way to do that.
Okay, the time is now up, so thank you for your questions, but thank you even more to the Minister for an excellent presentation and for taking our questions in your busy schedule. It's really good to have you here.
Thank you very much.
Thank you very much.
Thank you.